Welcome to the latest episode of our Autovate Podcast. My name is Cliff Banks, the host, and we have with us today Neil Hiscox. We will be talking about the UAW and Unifor negotiations currently going on, some of the differences between the Canadian and U.S. auto markets, and some other things such as potential acquisitions in the UK from the Canadian side. The future of data will definitely be a topic of conversation. Neil is the publisher of the Canadian Auto Dealer magazine. He has his own media company north of the border. In fact, Neil is going to be joining us at the Autovate event, December 6th through the 8th. He'll be on stage with me moderating some panels. Neil has a long background in media and has also served on the boards of several companies, both in Canada and in the U.S. So it's an honor to have you joining us today, Neil.
Thanks, Cliff. It's fun to be here. I look forward to joining you down at Autovate in person, but it's fun to do this virtually as well, and lots to talk about.
Oh, so much to talk about. First, obviously, apparently you guys north of the border know how to negotiate these UAW or automotive contracts better than we do down here in the U.S. I think Unifor last week came to an agreement with Ford.
They did. I think the most interesting thing about the negotiations is the approach being taken on either side of the border is actually quite different. What Unifor is doing up here is, I would say, probably what's been more typical on both sides of the border in the past, which is first off pattern bargaining. So Unifor targeted Ford first. You establish an agreement with Ford. Now you pick your next target. I think Unifor's identified GM as the next target, to be followed by Stellantis. And as you know, and the history of union negotiations in the industry has sort of shown that sort of, hey, we're going to decide who we have the most leverage with or who makes the most sense as a first target, get the best deal we can, and then that hopefully makes the pattern easier to propagate across the others. Whereas, of course, what Sean Fain and the UAW are doing is breaking with that tradition and saying, no, we're actually going to target all three at the same time, but target them in a more limited way. So that's a significant difference, but I think there's some other differences that are worth touching on as well. And quite frankly, until the dust settles on both sides of the border, then we can come back and say, all right, look, who won? But one of the things that I think the UAW's new leadership has tried to really emphasize is much greater transparency. So, we have seen the UAW leadership has actually distributed the offers to the membership to let the membership see firsthand what those offers are. That's a bit of a break with tradition too, where typically I think the approach was, hey, you've got a negotiating committee. We're in that room. Trust us to get the best deal for you that we can. And we're going to come out afterwards when we've got a deal and let you know what the highlights of all those deals are. That is, again, kind of more consistent with the approach that Unifor is taking. And it's going to be interesting to see how the rank and file on each side of the border respond. I think it's also safe to say UAW has gone in with a much more antagonistic approach. I think there's some real differences in the language we hear from Sean and the UAW leadership as opposed to what Unifor under Lara Payne has been doing. We're still seeing the photo ops with leadership on the Unifor side. We're not seeing that on the UAW side. So interesting to see, and it's kind of fascinating because these are different unions, they're different countries, they're different markets. They're often not negotiating at the same time, so you don't have the chance to sort of hold the two up side by side.
Yeah, this is kind of a weird time in that they just fell at the same time this year as opposed to other times.
I think the last time that happened was back in 08, 09 with the whole financial crisis and all that. So it's going to be really interesting to contrast the two. I will say this, they have a deal with Ford, but I think it's fair to say it was a narrow mandate. I think they got 54% of the rank and file to go along with it.
Right.
And there's some subgroups within Unifor, particularly on the skilled trade side, who've said, well, we don't.
Yeah, not so sure about this.
Not so sure about that. So I think Lara's got some work to do internally to really get it sold.
Yeah, I know here, with the U.S., you mentioned the transparency that Fain has approached the negotiations with, but I think it's transparency to a point. Transparency is on the deal level, but the strategy that they're using has been very close to the vest. In fact, had the automakers, the Detroit Three, guessing as to where the strikes were going to take place initially, and apparently all three got it wrong. And, there's a lot of movement back and forth in terms of moving the parts and vehicles and trying to prep the plants for the pending strikes at the time. If you're looking at it from a negotiating perspective and what he's trying to get for the UAW, he has certainly won the early battles in terms of forcing the automakers into moves that they probably would not have made if it had been a traditional method of negotiation. So fascinating to watch Unifor negotiate its deal versus the U.S. and what kind of differences there are going to be.
One thing that really, it surprised me was, and look, we have to see what the ultimate numbers end up being, but that they were able to negotiate a change in pension plan from defined contribution to defined benefit. And as most people know, across the economy as a whole, very, very few people are still covered by defined benefit pension plans. If anything, a lot of those are legacies and new people coming in aren't. So I was very surprised to see that. I think that's a non-starter south of the border.
I agree. Yeah. There's no way that's going to happen.
Whether what happened in Canada starts to affect the expectation of a UAW member and it actually makes it a bit more difficult for them to sell a deal into that membership, will be interesting to see.
So there are obvious differences in the market, but yet, as we've seen over recent years, there's been a lot of movement back and forth. Canadian dealers making plays here in the U.S., quite a few now. I think it's over 10 at least. And then we have certainly Lithia going north of the border, making some inroads in Canada. From your perspective, what are some of the differences in the market, the two markets?
Well, I think, first off, I think in terms of the cross-border piece, I think what's driving that really fundamentally is as consolidation has picked, shall we say, the most desirable fruit from the tree, and then you start to say, all right, what's still available? I think that is a big part of what's prompting it. But interestingly, I think the Lithia deal stands apart a little bit. When Lithia first acquired FAF up here, I remember having a few conversations where I said, I think, is this going to sort of open the floodgates? And I had a number of people say no, because for most U.S. dealer groups, Canada's not a particularly attractive market. Generally speaking, from a regulatory standpoint, it's sort of comparable to a California or some of the more heavily regulated environments in the States. But the big challenge is vehicle throughput, that the number of vehicles sold per dealer in Canada just does not compare very favorably to most jurisdictions in the States. And what made Lithia and the Lithia FAF acquisition a bit different is FAF is really Porsche in Canada. And it was just such it was a bit of a unique opportunity.
Right.
Conversely, that number that may deter a U.S. group from buying into Canada in terms of that vehicle throughput looks very appealing to a Canadian group looking south. And where, one, they're looking at a regulatory environment that's probably less imposing or at most comparable to what they're already used to dealing with and living with in Canada.
Right.
And yet you have the potential to buy into markets with much higher units in operation and much higher throughput at the store level. So I think it's safe to say we're going to continue to see a lot of interest from Canadian groups looking south of the border.
Right. Yeah, that seemed to have taken off. Like I said, in the last 3-4 years, we've seen quite a few.
And look, let's not forget that one of the beauties of being a car dealer is you have a level of control over how you want to live your life and where you want to live your life that some professionals don't. And it gets cold up here in the winter, and Florida and Arizona and places like that look pretty compelling. So
Sure.
if you can
Yeah, and we've
combine,
seen a lot of purchases
Yep.
both in California, Florida, and Texas and Arizona, in those states, to your point. So, yeah,
But when we
lifestyle
start
choice.
to see Canadian groups buying up stores in Minnesota, then that's off the table. But
Right. Interestingly, one of your dealers, smaller one, I think 15 stores, he's come on strong, but the Alpha Group now, I think it's Global Auto, which is the name that they're using to go into the UK market. They made the initial bid for Lookers, a pretty large group in the UK. Just 3 weeks ago or so, it looks like the bid that they made is progressing nicely. I think 90% of the shareholders of Lookers agreed to the bid. So I think it's just a matter of time before they close that deal. But that's a pretty big play. I mean, somewhat under the radar, but I think it's a pretty big play for a Canadian group, 15 stores, to be looking international.
my understanding, I think Lookers is about 147 stores. Is that right?
Something like that. Yeah.
So,
Yeah.
to take a group the size of Alpha, and I mean, that's interesting in of itself. Man, I'd love to be a fly on the wall for some of those meetings to really understand how much we can look at that and learn from it in terms of whether we're going to see a lot of follow up. I think
True.
a bit early to tell on that one, but it's definitely worth watching. And
He might have benefited from the fact that Pendragon is on the market and there's so much activity surrounding Pendragon that we're seeing. And as of our recording time now, 3 of the public dealer groups in the U.S. have made bids. It's been an ongoing story between Lithia and the Hedden Group, a Swedish group, going at it, trying to outbid each other over the last year. And it flared up again in recent days. Both Lithia, Penske with the Hedden Group came in trying to outbid Lithia. Now AutoNation has submitted a bid. Now we're just waiting to see if Group 1 comes in. Group 1 also has a sizable presence in the UK. But maybe Alpha benefited from those groups being distracted with that group, because there was speculation that Lithia or someone else might make a bid for Lookers.
I definitely think they're a surprise player in that race for sure. And I think for a Canadian group that is looking for its first or in the early stages of looking at international acquisition, I think the U.S. market is just so much more logical a place to look, in no small part because the vehicle segments are so similar. It's interesting. I spend a fair bit of time with Lawrence Hamilton, who heads up Genesis in the UK now, previously headed Genesis in Canada. He's been living firsthand just how different those markets are and the vehicle segments and all the rest of it. So, yeah, I think if that's where someone is going to look for expansion beyond North America, there's a few extra challenges over perhaps looking south of the border.
In Canada, are you... is there any conversation regarding China and a possible entry into the market?
Yeah, no, there's a lot of conversation, and I think we're all watching very carefully. One of the biggest differences when it comes to new market entrants between Canada and the U.S. is we don't have franchise legislation in Canada.
True.
And so what it does is it gives some of these new players the opportunity to play with business model in Canada in a way that they can't in the US. And I mentioned Genesis. Genesis is a good example. In Canada, when they launched 5-6 years ago, they launched with an agency model as opposed to a franchise model. The big difference there is that Genesis Canada retains the ownership of the vehicle right up until it's sold. The distributor is paid a commission on the sale of the vehicle. We're going to see, I think, some experimentation with direct to consumer. I mean, obviously Tesla is already there, but I think we're going to see.
Right.
But interestingly, I think we are at a time where there's a lot of experimentation being thrown at the wall. Beyond just the Chinese, one of the companies we're looking at, of course, is VinFast out of Vietnam. VinFast is in Canada now, and they're going to be expanding in Canada. Initially, they were looking at a direct-to-consumer model, and my understanding is that they're really looking at probably more of a traditional dealer model, though whether it's franchise.
They're doing that here in the U.S. also. Yeah.
So
they've changed.
That legislative difference makes Canada an interesting place to, if you will, experiment or get a toehold in North America. And I think the size of the Canadian market also makes it an interesting place to experiment. We've actually seen that in tech and in some other industries for a long time. So I think we're going to see a lot of activity. And I know, you mentioned earlier, there's a few organizations up here I try to help put events together with. And I know around the table of all of these meetings, when we're planning the agenda and planning who we want to bring it as speakers, those who are able to bring some real insight into China and how that may start to impact Canada, there's a lot of appetite there.
It's fascinating. China's approach globally, internationally lately has been to partner with dealers and to shy away from that direct-to-consumer model. I know in Japan, BYD is planning on having 25 dealership relationships by the end of the year and 100 by the end of next year, and they're doing the same thing in the UK, partnering with several of the larger dealer groups to sell models through those dealer groups. And they're doing the same thing in Germany and throughout Europe. So I think the demise of that dealer model has been greatly exaggerated when you say that.
Oh, I think that's true. I mean, I know, when I speak to some of the Genesis distributors up here, and, back to the consolidation piece, most of them
Sure.
are in multi-brand, well, all of them are in multi-brand groups. So they're
Yeah.
living with both, an agency model on the one hand and a traditional franchise model on the other. The lesson I take away from what I hear is, frankly, either model can serve the dealer well if it's managed correctly. I think some of the risks on the agency side are now the cost of those vehicles is staying on the books of head office. Are they going to carry sufficient inventory? Are they going to make sufficient demo and loaners available to be able to properly support that customer experience? Where I think it's worked very well, and does work very well on the Genesis side, is you've got a premium brand with the volumes that reflect that. I think it's probably going to be tougher to migrate it to a mainstream brand. And so to your point, I don't think it's going to be a stampede. I think the franchise model has proven itself to be resilient over the last 100 years. And that resiliency is still there.
On the material side, Canada seems to have less challenges on letting some of the lithium mining and mining nickel and cobalt and all of the other rare earth minerals. It's a little easier for you guys to secure permits than it is here in the U.S. And obviously, as we know, China controls 1,000% of the rare earth minerals here that are necessary on the EV side. But there are companies that are even here in the U.S. and Australia that are mining in Canada already for lithium. Is that a big conversation in the automotive space there? Or
yeah, I think it is. Historically, and you go all the way back to things like the Auto Pact in the 60s, and this is really before the emergence of Mexico as a manufacturing jurisdiction. Canada was a very significant overproducer of vehicles because it was producing primarily for the export market to the States. And obviously, we don't have as large share anymore as Mexico did. And I think there's a lot of players in Canada that are saying the need to establish and grow a battery materials supply chain creates an opportunity for Canada to achieve some leadership and some growth again. So I think there's a lot of focus on it. Canada has been a mining jurisdiction, a hewer of wood and drawer of water for a long time.
yes,
and so you've got tremendous mining infrastructure and that established here. And so to re-aim some of that at the kind of minerals and materials that a battery value chain needs, I think, is a Canadian opportunity. I think some of the interesting things will be, at the same time as that's going on, there's obviously tremendous opportunity to grow that out and desire to grow that out in the States as well. And you start to sort of swing back into the politics of, what will qualify for IRA and what won't. And
true.
so again, some interesting negotiation where it'd be fun to be a fly on the wall. But yeah, I think you're going to see Canada continue to try to push to establish a footprint in that battery value chain.
Yeah, and it seems like there already is. I mean, Albemarle, along with Piedmont, trying to secure lithium mining rights in North Carolina, outside of Charlotte, near Kings Mountain, have not been able to. And I think they've moved to Quebec, actually, to secure some of their lithium that they can then start processing. So already companies here in the States have had to look toward Canada to secure some of that lithium and other rare minerals. So like you said, it's going to be a process but it seems like you guys may be a little better positioned on the regulatory side than we are.
Well, and maybe some of that is Canadian governments learning the hard way, because I think when the manufacturing plant game really moved to, you need that strong state investment and federal investment to attract those plants, I think Canadian governments at the federal and provincial level were quite reluctant. And, maybe there's a little bit of we have to make sure we don't learn that lesson twice.
We're still learning it here. So I want to talk a little bit about the gray market, moving cars back and forth from the U.S. to Canada. The manufacturers kind of frown upon that to some extent. Is that still a topic in Canada?
I think it is. I mean, dealers look at exchange rates pretty carefully, and they look at, and, particularly, there's plenty of used vehicles that will come back to a dealership and are on a truck south of the border the same day.
Right.
I think that's it's part of the landscape. I wouldn't say it struck me as something that is top of a lot of the conversations right now.
Right.
Part of that may be, let's face it, we're still living very supply constrained lives on both sides of the border.
Well, that is true. But I mean, just being here in Detroit, and I know you're in Canada, I'm just south or north of the border, depending where you are in Detroit. That old song, South Detroit. South Detroit is actually Windsor, Canada.
Yeah, my birthplace, interestingly enough.
Yeah, well, great. So just on the tech side, real quick, any M&A rumors on the retail side, not from dealership, but maybe more so on the tech side?
Yeah,
up there, or
we're all sort of chasing being able to provide, let's call it that Amazon customer experience, that know me customer experience. And this is an area where, the legacy of the franchise dealer network creates some real challenges. If you look across a particular brand's dealership network, they might have 20 different DMS systems in place and 20 different CRM systems. And the reality is to create that know me customer experience, what you ultimately need to have is a level of integration between all these different tools that are in place at both the dealership and the head office level. And then frankly, your other vendors that are involved, right, to try to create that one record that reflects the full totality of what the customer is doing. And we are so far from that. And I think, with the start of this year, when ChatGPT became, one of the most talked about things going, we're suddenly seeing generative AI adding another level of new and complex. And I think the reality is, at both the dealer level and the OE level, they're just not equipped to easily figure this out. It's a monster. And I was down at an event in Vegas where somebody from Group 1 was talking about they've really gone a long way down the path of making the investments to create the integrations to try to create that one record.
Sure.
And it's like climbing Everest. And if it's like climbing Everest for somebody with the resources of a Group 1, now you try to imagine for a small regional dealer group with 4 or 5 stores. And of course, they're dealing with a patchwork of different approaches across their OE brands. And all this really needs to be figured out in no small part, because as the vehicle itself is going to start to become a revenue opportunity, notwithstanding BMW and their heated seats, but as it starts to become a revenue opportunity, now you've added a third pole into that data transparency and visibility piece. So there's going to have to be consolidation and rationalization on a scale that we just haven't seen in order to really create that tight data flow between the car, the OE, and the dealer.
Well, that's a topic we could talk about for another couple hours for sure.
Yeah, it's a big lift.
I've written about that. Yeah, I've been writing about that for years. But to your point, I think the OEMs, the data sets in the OEM level are so siloed still.
Yeah.
It makes it very hard too. But bringing that vehicle into play and all that vehicle data, that's the intriguing part over the next 10 years, I think, in our industry. Now, today's episode of the Autovate Podcast has been brought to you by DAS Technology, whose customer data and experience platform addresses that know-me level of customer identity and clean data that Neil and I were just talking about a few minutes ago. The future of data will definitely be a topic of conversation at the 7th Annual Autovate event this December in Scottsdale, Arizona. Have you registered yet? It's the industry's only conference focused on investment in the automotive retail space. No vendor pitches, only candid conversations with dealers, entrepreneurs, and investors driving the future of automotive. In Scottsdale, December 6th through 8th. You don't want to miss it. For more information and to register, visit us at autovate.org. Well, Neil, we have so many things we could talk about, but I'm sure we will explore more at the Autovate conference. Look forward to having you on stage.
Absolutely, and I look forward to it. And that we're at the busy time in the schedule from a conference standpoint, but it's a lot of fun. And man, there is an awful lot to talk about. So
there is. Fantastic. Well, thank you so much for joining us today.
My pleasure. Talk to you soon.